Excitement today, kids. Um, I tell you, it's been the markets have just had some wonderful volatility, and the markets have been making sense technically, bouncing off of our leading technical parameters, and it really has been quite wonderful today. We actually first we had some minutes come out in the UK, and then some eurozone fundamentals, and then I won't bother getting into that right now, but the market really has some good volatility and some good range leading into today's U.S. CPI, and really, I mean, stocks really plunged after a stronger than expected rise in consumer inflation, and stocks plunged because of fear, some of the fear that's on Wall Street as a result of the rise in consumer inflation. And of course, the fear is that that interest rates will keep climbing, and the consumer price index went up by what was it 0.6% in April, which was ahead of forecast of 0.5%. But the core CPI, CPI consumer price index, which measures or is a reflection of inflation, the core CPI without food and energy. Also grew at a faster than expected rate of 0.3%. Now there's CPI and there's core CPI, and core CPI. There's kind of a long history behind the the uh, the distinction between the two, the separation of the two, and that was at a time where they separated food and energy because, well, geez, we don't use food and energy, do we? Uh, they separated the two at a time when the government became concerned about the CPI number being a poor reflection on their ability to manage the economy in the U.S. Therefore, they separated the two, hoping that the numbers could be uh, reflected more favorably for themselves. But in any event, um, you can read more about that on the internet. What I want to show you here is we saw price moving here. Let's just take this guy out of here. This is the British pound dollar. It's a 60-minute chart, and as many of you know, I like to just watch the 60-minute chart because it gives me a real good frame of reference to what's happening the previous week. We actually saw price rise through Asia, through the previous day's high through Asia, somewhat unusual. And then it was really interesting because it parked itself right up above here, above this resistance and above 8,900, came down around the open of Central Europe, came down to 8,900, tested. It was actually set up a pretty nice buy opportunity here, I will say. And as well, if we just expand this a little bit, I just want to show you this. If we just expand this a little. I'm looking at this swing here. Sorry, I got the wrong swing. This swing right here, this level of resistance, and it just kind of came back here to the 38% and then rallied through it. Okay, contracting that again. Um, Now we saw a release from 8,900, which was good. And what I really liked was I liked this steady move. We saw liquidity push things higher in Asia, and that starts to stretch the range a bit. Then it just settled a little bit leading into the open of Europe. Then it rallied the open of Europe, and we saw some real steady flows through here. We saw a bit of a bounce at 89.50, and we saw some bounce, some fractals, and a bounce here at 89.50. A little bit of pullback, but the flows were pretty steady. And what was nice is that when price started to move towards 190, it was a pretty steady flow. And what happens is because the flows move in waves. Um, we had a real nice sell, and in fact, I'm kind of choked because I made the trade, and I didn't record it. I just didn't. I didn't have the wherewithal at the time to record. I wasn't thinking of it. But we had a real nice bounce, and I'm going to take the low of this candle to show you how much it moved to. But it moved down back down to 50 before price waited for the CPI report, and then CPI volatility, of course, picked up. Price spiked. Price spiked to 190.25, And it rejected, folks. I mean, it rejected. Remember, on the daily chart, this 190 level is I believe it's a 62%. Uh, I've lost my mind here for just a moment, but I believe it's the 62% retracement on the daily chart. Okay, well, let's just pick this up again. It's actually not. We're at the 70. I'm sorry, the 79%. We're at the 62% retracement on the euro. So I apologize. I was wrong, and I should know that at the back of my hand. But anyway, I knew one was the other. But it's the euro that is at the 62%. But on the pound, it's at the 79% retracement and the support resistance level, which converges with the support resistance level. All right, and back to the 60. Now we saw the rejection following CPI. Beautiful, beautiful opportunity for a trade. Just wonderful. And when that rejection occurs, what you want to do is this: is you want to take this Fibonacci like this and move it to the high. Watch price move down, and this is real nice. A real big range, 225 pip range, fast price action, and coming right down to 8,800 and 786, 79%. I love it. Okay, I love these, and it's just been a beautiful day. And I just want to show you one more thing, just so that we can we're going to pull up a pivot level here on the Fibonacci Trader software, and you see right here we're beyond R2, and here's our central pivot for the day, and it comes down to M2. All right, just wanted to show you that. And so it was that was some real nice volatility. The market making sense. Oh, one other thing is MACD divergence here. We have a nice divergence on this blow through top, and now we're getting look at this bounce off of 8,800. It already bounced in excess of 50 pips right here really quickly. That would have paid you very quickly. And I apologize, I forgot to record it, and I'm just kind of choked about that. But now it's back at 88.50 again, and it will probably 88.50 will probably cap the consolidation, and we may see just some price move into a pennant here. All right, and on the euro, there was something on the euro I wanted to show you, and where is our euro friend? The euro, what was it I wanted to show you on there? I don't recall. Don't recall what it was, but I do remember it was important. Oh yeah, there was something. I'm sorry. There's something on the euro I wanted to show you. And it's this right here. Let me take the pivots off of here. Now you see here this 79% retracement level. It's right here. Okay, here's our low, and price from this low right here, price retraces to 32, 50, 62, and here's the 79 retracement right here, this red line here. Now, but what I want to note to you is this low of support right here overrode or stood in the way of price moving up to the 79, which is where I would look, but I would make a very clear note of that level as a price reference point for dealing. All right, and that was important. So we came back to to a deep retracement. You're almost to the 79, and we extended out to the extending out to the 127% extension, which coincides with deep retracement. All right, and that's what I want to show you on euro. One other thing I want to show you here on the let's have a look at the I'm going to go to I want to view my workspace list, actually not the Windows list. the workspace list, which is here, and I want to go to my British pound workspace list, which I've created, and I want to show you what this looks like on a 15-minute chart. Here, this is a I apologize, you don't know what this is. This is an RSI, but it's a very distinct setting for a 15-minute chart with kind of a unique setting. And this acts as a filter. We've placed our low base and high base at 51 and 49 to act as a filter. And we moved above the filter line here on British pound at 88.41 before the move up to 190. All right, and just a very, very nice move. And we've since turned, but I can't. This indicator is really only available to deal book users. Okay, and that one. I want to show you what it looked like on the what we looked like here on the 5-minute chart. Price rallied, bounced at 190. Look at the bounce at 190. Very, very, very nice. It just was a bleeder down leading into the CPI. Then the CPI, reaction to CPI, and of course U.S. dollar rallying because if it's perceived by the market, the reason the U.S. dollar would rally today is if it's perceived by the market that interest rates. Let me step back. Inflation is controlled by interest rates, or the attempt to control inflation by increasing interest rates so that consumers hold back on their borrowing and spending. And okay, we have this reaction here to CPI and U.S. dollar rallying because there is a perception that interest rates could increase to control inflation. And right now, actually, the 10-year yield. Let me just look at the 10-year yield. Just give me a second here. The 10-year yield currently is up 60 basis points. Actually 58 basis points, and which means that the Treasuries market is pricing in another interest rate hike. Therefore, we can often see a U.S. dollar rally on that note. The 1-hour chart, I've really liked this. This indicator has been real nice, real favorable to me, as you can see. And again, I can't show you what this indicator is. Only available to dealbook users. Actually, I'll send that out to you dealbook users, okay? But it's been very favorable to me, and I can maybe send you an explanation on that as well. But once again, a nicer look at the reversal head fake down to the 79% retracement and 18800. I think I'm just going to leave it at that for now. Okay, and that's it. Good luck with your trading. Hope you've been making profits because the markets are good, folks. Right now, the markets have been very good, and that's it. I guess we'll catch you all later. I think I'm out of words for today and out of time. I'll catch you guys later. Good luck with your trading and be careful out there.